Hello and welcome again to this journey to discover where the stock market is heading. Right. Okay, this is a daily chart of the S&P 500 and I have with me this daily chart of the S&P 500. Let's switch to the futures. Have a look at it. Alright, the S&P 500 has broken out of a daily ascending triangle. It's useful to look at the S&P 500 because 75% of stocks will follow the direction of the US stock market, the main index, and that's the reason why we want to look at it carefully. So we have an ascending triangle. I've just colored this area green because when a stock index breaks above the ascending triangle, it should not drop right below this top here. So we want to continue to be bullish in the stock market as long as it stays above the top of this ascending triangle. I think yesterday had kind of topping tail a bit, but it's too early to say that it's gonna be bearish or reverse back down. Okay, and if we were to take a measured move from previous area where it breaks up to this area where it stops rising, this is the measured move. Just clone it and then project it from the base of the chart pattern, ascending triangle. Target is about here, 4936 for the S&P 500, and the S&P 500, the 20 MA is still rising, the 50 MA is still rising, so we should be bullish bias. I don't know, maybe there might be a correction a bit down here, but we should continue to be bullish bias. Now let's take a look at the hourly chart of S&P 500 futures. So now you can see that it broke out of this this rectangle consolidation, and straight away there was a decline, but it found support at this consolidation area, and this is trading sideways a bit. So our nearest reference point is this box area. Okay, well, if we're looking at a 60-minute chart, and as long as it stays above this area short term, we should still continue to remain bullish. But if it drops below this area, then we might see a correction down to the next level here. Take a look at the Nasdaq 100 futures. Nasdaq 100 futures also broke out of this kind of, I think it's more like a small cup with handle pattern, and if you take the height of this pattern to the breakout, just draw the height of this, the handle there, and I think the target has been met. Okay, and so it also has a topping tail, but doesn't necessarily mean that it will decline. Okay, rising 20 MA, rising 50 MA tells us to be bullish bias, to buy the dips and the breakouts. So almost the same thing as the S&P 500. It broke out of this consolidation area and corrected, finding support in this area. So as long as the Nasdaq 100 stays above this area, you should remain bullish. The trend is your friend. Now I think it's time for us to have a look at a few sectors. First of all, let's take a look at the technology sector. Technology sector has been in a tear. Okay, just shot up like this. A little topping tail here shows that it has run up too fast. Okay, But if you look at the weekly chart is in uptrend, very nice. Daily chart also still above the rising 20 MA and 50 MA, although when the ETF goes too far from the 20 MA, it's kind of extended, and you want to be careful because it might just correct like that. Looking at the 60-minute chart, okay, this will be a nearest reference area. Alright, you want to have a watch the box here. So if it trades below the 20 MA, and this box might have a bigger decline. But if it just continues to trade sideways and stays above this spot area, you continue to move up. And let's look at the consumer discretionary sector. Consumer discretionary, not as strong as the tax, at a high here and decline, now sitting at the 50 MA. Okay, and compared to the tech sector, it's not making a new highs, okay, but there is a lot of resistance over here, this side here, that needs to be absorbed, and if you can absorb it, you will continue to just hopefully move higher. So at this moment, you're sitting at the 50 MA here. You might say that it's a double bottom, but you know, might have a bearish cross soon if it cannot hold this this spot area. You know, this lows here. If it cannot hold, then it might just kind of drop to the 200 MA. So we want to see it trade sideways and then hopefully move up higher. Let's look at the energy sector, XLE. XLE has been below the 20 MA, 50 MA, so not very good. It's like making lower highs, lower lows. Okay, but in context of weekly chart, you can see that it's still kind of trading sideways for a long time now at the support area here. So generally, you don't want to be buying stocks in the sector if it's below the 20 MA and 50 MA. If it's around here, when it was above the 20 MA, 50 MA, you should be buying the stock in the sector. Let's take a look at XLP, consumer staples. Consumer staples, the weekly chart, lots of congestion and resistance area here, which is why it's difficult for it to rise. Okay. Recently just broke out of this ascending triangle bottom. Okay. The ascending triangle bottom can be a bullish reversal chart pattern. I talk about it in another video, which I'll put in a link description below if you want to learn more about the bullish reversal chart patterns. So the height target has been met. It's still in a bullish uptrend, daily uptrend above the 20. The 20 MA is rising, the 50 MA is rising, but just afraid that you might find the resistance hard to overcome. This is sitting at the 200 MA, so it might just roll over if you're not careful. Now let's draw this trend line. Trend lines are very important. We generally don't want to see stock or index drop below a trend line. So it's sitting at the trend line here, right, just slightly dropping below it. And what we don't want to see is for the XLP to drop below the 50 MA and then just tumble down. Okay. Any stock we want to look at, maybe just Apple, because it's a very important stock. So the stock has found support again at the rising 200 MA. Now the 200 MA can be a very important area because many stocks tend to stop dropping when it reaches the 200 MA, like here here. So here's the double bottom, and it's now near the old highs. These are resistance areas. Okay, but Apple is still doing fine. Let's take a look at the indicators. Apple move up a bit overbought here, but so far no slowing down of bullish momentum. And looking at that 60-minute chart, drop below the 20 MA a bit, which you might want to be a bit careful. There's a sell signal here in the 60-minute chart, so it might just roll over, you know, but hopefully it consolidates and continue to move up. So moving back to the SPY, it's always good to look at the SPY, which tracks the S&P 500. Generally, most stock market will still be alright if it stays above this support area. Okay, you don't want it to drop below the 20 MA and drop below this support area. If not, there'll be declines, correction, and maybe a corrector around here. But we'll see, it might be a buying opportunity. So it's very interesting to look at the market. I try to look at it every 1 or 2 days, preferably every day. When we look at the market, it doesn't mean that every day you need to take action. We want to take action when the market drops to an area of value, nice support area, 50 MA. You also want to only buy stocks when there are nice setups. But I hope this analysis helps you. On daily chart, the S&P 500, the US stock market is still healthy. You should be bullish bias. Okay, and if you find it helpful, please smash the like button and subscribe to my channel, and I'll see you in the next one.